How's everybody doing? Good to see you guys. Adrian, it is awesome to see you. Kevin Flowers, got a lot of great people. Good to see you guys. I was just on with Jeff and he said, I'll be right back. So he left. Chelsea Monk, it is so good to see you.
Hey Jim, how's it going?
Good. If you guys don't know Chelsea, you should, especially given the big, beautiful bill, because she knows it really well. And she's a great resource on taxes. See, I love connecting people. I love people connecting to Chelsea because she's a friend and she does a great job. Both. You're like the double hitter there, Chelsea. So put your contact info. Tell us, everybody, start in the chat. Tell us where you're at, what city and state. For Stephen Fryer, that includes what country, because
Yeah,
he's in beautiful Ottawa today, Stephen. Yeah, good guess,
correct,
right?
correct.
All right.
Beautiful Ottawa. It's got to be 95 degrees and sunny. Sure
Ah.
beats minus 40 in the middle of winter.
I was in Buffalo last week, so I was right, and I was actually in Canada last week because we went to Niagara Falls, Canada, to Clifton Hills. It was always fun.
Nice.
So I love it up there in the summer.
In the summer. Agreed.
It's a good place to be from. Rick, great to see you. We're going to make this pretty interactive today. We like to have some fun. I was just telling Jeff. Jeff just stepped away for a second, but I got home and I got to my house and I had a power outage, and I'm like, oh my gosh. It was sort of planned. Like the power company told us it was going to be off for a little while, but it would be back on by 2 o'clock Eastern time to start this. And I asked the people out front working, and they're like, we have an emergency. And this was at like 20 to 2. I'm like, oh my gosh. So I ran over to my daughter Melissa's. I'm like, Luke, what's your Wi-Fi? And here we go. You got to pivot. So if my grandkids come running in from the pool, it'll be a little loud, but it'll be okay. And so I'm at Melissa's house now with her dogs. Hope everybody's doing great. Valerie, good to see you. It was nice talking on the phone this week from Indiana. Tracy Z. By the way, Tracy is an amazing note investor and has a great community. You guys should connect with her. Ray Buckhalter, great to see you. Awesome hard money lender from Alabama. Birmingham, Dealmaker Birmingham is ready to launch here very soon. You got your team rolling. Ray, tell us a little bit about that.
Well, first, I want to just say how awesome it is the support from you guys,
Yeah,
from the meetings that you have to the handbook that you put together.
thank you.
That's all been super helpful. We have our date set. It's going to be September 9th. We're going to do the second Tuesday of each month, and yeah, we're rolling right now, getting sponsors. It's been really interesting, Jim. We've had people ask us even before we've had people say, and just telling them about the event, are you going to do sponsors? And so it's coming together.
I love it. And just as a side note, that's Steelmaker meetups, which we're meeting in about 30 cities now. We have a couple, two or three of them that are all Spanish, by the way, which is cool. But I was talking to Jeff Watson a couple weeks ago, and he gave me that idea, Ray, of the 5K challenge. Not to run 5K, but to create 5K a month of Dealmaker sponsors. So if you're in a city where there is a Dealmaker and you'd like to sponsor, reach out and I will connect you. You're not sponsoring me. Well, you can sponsor a Dealmaker too, but I was thinking about the Dealmaker meetups on that one. I love it. Jeff, you're back. How you doing?
I'm here. I'm ready. I'm just looking at all my friends. I mean, I'm seeing what a distinguished panel
Oh no.
of rogues and scallywags and investors and so on. I mean, I'm being very complimentary. Of course, I'm looking right at Adrian Smoot. You know, when I think of rogue, and then when I'm looking around and I see scallywag. I saw Rob Messenger's name there. The general's here. I see Mike Summerall's here. So yeah, I'm excited. This is going to be fun. Yeah.
Yes, it is. It is very humbling. Chuck Glover just signed in, so I'll just say you've got to be in the room. Chuck is so right. And This is a very humbling room because there are amazing investors in this room. There's a lot of beginner investors too, so you're welcome as well. We have people that are very experienced, some that are very new. By the way, my assistant Melanie's on. You can wave, Melanie. She keeps my life straight. Can we all be grateful for assistance in our life? She keeps my life so organized. Um, Myself, if we've never met, I'm in Richmond, Virginia. I'm the founder of Dealmaker, but I've actually got 4 different businesses. One sort of the networking and education piece, which is Dealmaker, and we have these big meetups twice a year. The next one's in Dallas and then in Richmond in March. But then we have 30 Dealmaker meetups around the country that are meeting up both in English and Spanish. So that's sort of like networking and education for me. I've got a pretty active lending business. It's getting more and more busy, as Jeff sees, because he's doing all my lending docs. I'm not a hard money lender. I'm truly just a private money lender. I love to do wraps. Some of my co-lenders are on Zoom right now, so you guys that co-lend and work with me know how much I appreciate and how grateful I am for you. Then we do some flips, and I really love being a landlord. I do both traditional landlording, like long-term leasing, and I do 30-day plus, and I do a little bit of short-term as well. So I do sort of all three. I can tell you we are knee deep in it. My wife Cheryl's been setting up 2 furnished rentals this week. It is, how many of you guys have set up a furnished rental? Oh my gosh, it's so much work. You guys feel my pain? Like Cheryl's doing it, but it's a lot. I'm just doing like the running and just like coordinating, and she's like does all that stuff. It's amazing. But so I do all of the above. We have 4 different businesses. I have Inner Circle as part of the Dealmaker education as well. Jeff, you want to introduce yourself from beautiful St. Pete Beach / Conneaut, Ohio?
Hi, my name's Jeff. I'm currently in Ohio. I'm a real estate investor, buy and hold. I'm also licensed to practice law in the state of Ohio. I love helping people do IRA related loans, private lending out of self-directed IRA. That is my favorite thing to do. Whether you're using an IRA note LLC, a trust, whether you're using a multiple member LLC, whether you're straight out of the custodian, I love it all. It's a lot of fun. There's a lot of things that I do. I don't want to spend all my time talking about it because, Jim, we got to talk about this right now. I have a hard interruption at 3 o'clock.
All right.
Expecting a call from Congressman Andy Barr's office. The call may
Okay.
take 7-8 minutes long, and then I
No
can come
worries.
back. So
We
if you
got your
want to,
back.
so if you want to just let me step out for that time,
No
we can
worries.
be on 3 o'clock, okay?
You got it. No
All right.
worries. Hey, we've got a ton of questions. Like we got flooded with you guys that registered with questions. Oh my gosh. And some of them were really detailed and advanced. Others were beginners. And like I said, Melanie keeps my life straight. She took all of them that I sent to her in an Excel spreadsheet and summarized them. And so we've got those as well. We're going to hit up on those. I'll tell you what, I love lending and I love borrowing. Is anybody both a borrower and a lender? I started off as a borrower. When I first started off doing real estate was full time was like 20 years ago when I left corporate America. And I really had this mindset that you only use your own money and you put 20% down and that's how you buy real estate. But the more I started getting involved with going to places like Tampa, Florida, and meeting people like Jack Miller and Peter Fortunato, and then Jeff Watson and others, I realized there's this whole private capital economy that's happening with OPM, other people's money, OPI, other people's investments. And you can leverage not just money, but you can leverage other people's talents and other people's deals and participate creatively. And then all of a sudden, like the whole door opened for me. So I absolutely love private capital. I love seller financing, notes, all of it is really good. And that's why we're here today. I've been doing private lending off and on for 10 years probably, but a lot more in the last 24 months. And when I was lending only my own money, I was making like 15 or 18% a year. That's pretty good. 10 or 11% and a couple of points to short-term loans like 6 months or so to investors doing flips and rentals like I've been doing. But then I learned a lot. I had Jeff come on to my inner circle group one week. Jeff, this is when it clicked for me on wraps. You guested onto my inner circle. We meet on inner circle on Zoom every Wednesday. Jeff came on and he did a really good job explaining wrap lending, and everything just sort of started to click. And I saw the returns and they were like 25 to 50%. And I'm thinking, I'm in the mid teens. I was really happy with that. I'm not a greedy person, but all I had to do was learn this little bit of co-lending and then allow people to participate in my lending. And some of you guys are my co-lenders that are on. And all of a sudden, because I'm leveraged, my rates, my returns went to 25 to 50%. And by the way, some of my co-lenders that are on right now started off as a co-lender and then learned wraps, and now they've eliminated me. And I'm okay with that as well. It's a lot more work to put the whole thing together. That's why you get that return. Jeff, what are your thoughts when you hear private capital? What do you think?
Lifeblood of commerce.
Hmm.
That's what I think. It's the lifeblood of commerce. If you can't find the money from someone who understands the deal and get the money in time, the deal dies. You can't wait. You can't wait on institutions to make anything happen. I don't want to bash anybody. I don't want to bash any individuals or any banks or whatever, but I'm going to tell you, if you're not putting your own money at risk in a deal, I look at you a little differently. Because if you're just marketing somebody else's money, okay, fine, that's a great job, that's good, but you got to start putting some of your own money out there. You've got to know what's going on. You got to juice the deal. You got to make it happen. That's what I see.
And I also love borrowing money, so I've also borrowed millions of dollars. And some of the people, Jeff, that I first started working with like 12, 13 years ago are still are still my lenders. Like as soon as I pay them back, like we paid one back last week, and the first text was, please find another house. So if anybody's got something I can buy, I'm also buying right now.
I had an email this morning from one of my long-term lenders. She and I have done a number of deals together. And she's out west, and she's like, keep that money working.
Right.
That's all she said, is just keep that money working.
Love it.
Yeah.
So it's so true. So yes, I am looking, all of the above. We still got a lot of people coming in. We're up to 125. We had like 380 people registered today, which is amazing. So that speaks to the way this topic resonates with real estate investors. You know, the theme of Dealmaker for the next two Dealmakers is limitless. So I just encourage you to think about both your lending business and yourself if you're an investor borrower. Like, what would it look like if you didn't have to worry about capital? But the key to that really is finding good deals, because if you find good deals, all the capital's there. I wrote this in my ebook a couple weeks ago because it's Joe. I heard Joe Castaneda say this. He leads Dealmaker Nosotros, which is Spanish in Atlanta. He told me like 6 months ago, the way he described it was cool because he said, all the money is already printed, and think of it that it already has your name on it. All you got to do is connect a deal, a good deal, and it's that easy. So you can raise capital. You got to allow people to know your story, to know your deals. You got to know how to structure it. Same thing with wrapping. A lot of it comes back to structuring, which I really love, by the way. I guess the engineer part of me is still in there. So I love to structure. Jeff, what do you think of when you start thinking about raising capital?
There's a lot of thoughts that go through my mind. And the first thing I'm going to tell you is, if you've got a good deal, you'll find money for it. But some people are confused about what is a good deal. The second thing that goes through my mind, and Jim, it just came to me as you were talking, there are billions of dollars. Folks, if you don't write anything down, if you don't remember anything from this call, if you've got a 15-minute span of attention, we're 11 minutes in, there are billions of dollars of idle cash in self-directed IRA accounts right now. Billions with a B. Somebody's be like, well, I need $100,000 to do this deal. I need 300,000. I need 600,000. There are billions in the bank, in IRA custodian accounts, doing nothing except making interest for the custodian. So find a good deal and get in the room. Go find the rooms to get into with your deal. Once you get a deal, and get in those rooms and talk about it. Be like Chuck, get in the room, talk about the deal. They've got to know you, they've got to know the deal. And then you just got to get down to the paperwork. It's that simple.
It's the power of relationships is so powerful. Like they never taught me this in engineering school. I went to RIT in New York. They didn't teach me compound interest, but they taught me advanced calculus and differential equations. They didn't teach me anything about anything except being a great employee, really. They didn't teach me that I could rely on other people, build a network. The 5 people that I work with the most are going to have the greatest influence on me. None of that. But all of it is true. Jim Rohn was right. How many of you guys have built a network or an inner circle of friends that have been able to support you and really help you? And if you get stuck, they'll reach down and pull you out of that mud. And that's what's critical. And they don't teach that in school. Did you learn that in law school, Jeff?
Oh no. Oh no, I didn't learn any of that stuff. And by the way, I'm just going to call you out on something, how you just slid that right on by. One of the top technical engineering schools in America that you were at. I mean, I caught that. I don't know about anybody else, but I caught that. Like, oh, okay, he went to a really good school.
Okay. I was not smart enough to make it through RIT, but I will tell you that I showed up every day and I worked my tail off, and I just wouldn't allow myself to fail.
Yep.
That's how I made it through, because I am not smart enough to make it through that school, but I did. So
I mean, in law
you
school,
did
they
catch
did
that.
not teach me anything about,
No.
they didn't teach me anything about running a business. They didn't teach me anything about how to actually be a human being that did something other than read cases
Right.
and argue. That was it.
I was a great employee for 20 years.
Yeah.
I didn't even start real estate till I hit 40. So, and by the way, age doesn't matter. If you're young, oh my gosh, I want to work with you because it's so much easier. You've got such a long runway. If you're a little bit older, don't let that screw up your mindset either, because we're going to keep talking about Chuck. Chuck, are you able to unmute? I don't know where you went, but you know, are you able to unmute, Chuck? Here he is, almost 70 with $5,000.
Can you hear me?
Yeah, tell your story. Like you started at almost 70.
Well, obviously it's a long story, but in a 1 minute
Make it short.
nutshell, at age 67, 68, 69, I was not in a great financial place because of years of foolishness,
Yeah.
poor financial decisions over the years. I never knew anything about investing. I was a school teacher, didn't know anything about investing or anything like that. So my son shared a book with me. My son, Stephen Glover, who's doing fantastic, by the way, in real estate, shared a book with me, Cash Flow Quadrant. And for years, I'd been wanting to have my own business. I read that book, and for some reason, something there resonated. And I said, you know, like the V8 thing smack in the head, I think I can do this. And so then I kind of set my mind, this is what I was going to do. And then few months later, I've run into Dorsey Bodiford, who was teaching a class on wrap lending, because I didn't have any money, or not much. And she was teaching a class on wrap lending. And she said, you don't need much money and you can be a lender. And I said, boom, that's it. Because it wasn't going to be a wholesaler or a flipper. I'm too old to be running around chasing contractors and cutting boards and stuff. And that was it. So I made that decision that night, and then, you know, got an education, got in the right rooms, right, as Jeff was saying, as you were saying.
Yep.
And the rest is history, I guess.
So if you're 18 or you're 68, it doesn't matter.
I'm 76 now, so just getting started.
I love it. Love it. Yeah, you just spent a month in Africa giving away wheelchairs with Share the Love. I love that. So
Yeah,
let's start off.
in Europe next week.
Yep, let's hit a couple of questions. Can you grab a couple there?
Sure. Let me grab what I think is a fantastic, good question. And folks, there's great questions, and some of them are too technical, and I'm just going to kind of skip over them. But here's one that I saw it. I want to go. Ben says, how can I attract borrowers and raise capital? How can I attract borrowers and raise capital? And the answer is you've got to get yourself in the middle of the deal, Ben. If you're looking to attract both borrowers and raise capital, that means you're wanting to do like what Chuck just described. It means you've got to get yourself in the middle of the deal. You've got to get some education so that you know more than your borrowers, and so that you also know more than the other people who are trying to put money to work. And then get in the middle of the deal. Find a good deal. Is it in a good location? Does it make sense? Do the numbers really work? And go through that process. That's how you're going to get in the middle of the deal. And it really comes down to find a good deal, a good property that someone's going to get under contract, and make sure the numbers work. What is the exit strategy? What is the backup exit strategy? What's it going to cost to fix it up? What's the oops and surprise budget? Do the numbers still all make sense? Don't go try and raise money. Don't try and attract borrowers. Don't try and put deals together on skinny deals, on thin, shaky deals. No, you've got to find a good, solid, double base hit deal, and that's the ones you want to work with.
So that's great. Did that, Ben, are you on? Like, can you tell us if that helps you hearing that response? I think it's important. You've got to be able to have a good deal and you got to be able to tell your story. And, I think, Jeff, a lot of people are nervous about telling their story, and they shouldn't be. Here's the thing. I would say like 15 years or so ago, my story wasn't perfect either. Like when I first started doing real estate full time, I struggled like everybody else, and I would be nervous about that. I like wanted to control the perception a little bit because everyone else around me is like high fives and perfect deals and making bank, and I was struggling. But I think as you tell your story, it's okay to lean into those years where things were rough, the
Yeah.
tough times you made it through. When I'm doing private money lending, some of the times I like to ask my borrowers, like, tell me about a time where a deal didn't go the way you thought it was going to go, and how did you get
Almost
out of
every
it?
deal, Jim. That's almost every deal, and you
There you
just got to
go.
make it happen. You got to stand and say, what's plan B, C, and D, you know?
And you can tell your story like in social media now, so easy.
Yeah.
And so I want to see you guys do that. Take pictures of the houses you're looking at, the people you meet, the meetups you go to, the adventures you have, the contractors, the tenants, the title companies where you do a closing. All of that is part of your story. And as you tell that story in social media, people are going to start to be like attracted to that. And capital opportunities are going to open up because people want to participate in your deals. They just do. They're looking for good people and good deals to participate in. And beyond that, you can also tell your story a lot of different ways nowadays. You can do it in meetups, like dealmaker meetups around the country. You can also do things like podcasting. Chuck just mentioned. I was thinking about that because I used to host a podcast. Now I'm a podcast guest, and I was just on Stephen Glover's podcast a couple weeks ago. It's a great way to tell your story. So, Jeff, you were just on a podcast a couple weeks ago as well, right?
Yep. I got a story I want to share because
Do it.
this is the place to do it. I owe a huge, massive debt of gratitude to a number of individuals. And one of those men at the top of the class is the late Dykes Bodiford.
Ah,
Okay. I miss the man dearly. The fact that he and folks, I could tear up if I keep talking about him. Okay. I miss the man dearly. I would go to his seminars from 2008 through 2011, and at every break, I would duck out of the room. I'd go up and eat lunch in my hotel room by myself. I was too nervous to talk to other people. I knew I didn't know a fraction of what Dykes knew. But I practiced and practiced a little elevator pitch line. And one day I said, okay, I'm going to do it. And so I stay around for lunch. I sit down, I get something at the buffet. I sit down, and this man out of Wisconsin by the name of Roger sits down. And he asks me what I'm there for and so on. And I used my elevator line on Roger. And I mean, massive respect to Roger. Roger had the opportunity of taking two different companies public, very successful investor. And I told him what I do, connect people that, need money for deals. And he said, I might have some money for that. And the next thing I knew, I was facilitating a dozen private lending deals where Roger was funding these short sale flip deals, A to B, B to C. And that was one of those big aha moments for me. A, I was in the room. B, I knew enough. C, I knew a whole lot more than I thought I knew. I would work with people, and it just took off from there.
That is awesome. I love it. All right, next question, Jeff. What else do you see there?
Okay, so let me pull that up.
So a lot of people coming in. Welcome, everybody.
Here's another good one.
If you just joined us, take a second, say hello in the chat. Tell us what city and state you're in. Go ahead, Jeff.
So this one, I've got two questions here, and I love both these questions. And so I'm just going to go with the first one on top. Jim says, my daughter has an inherited Roth IRA with less than $200. Any ideas on how to jumpstart this small amount? The answer is absolutely, I do. The answer is absolutely. Jim, you want to find a deal that your daughter's Roth IRA lends the $200 less $20, so $180. Smallest deal I ever did was $300, Jim, so you can do this. And you lend like $180, wrapping a couple $1,000, and you get the points to come back into your daughter's Roth IRA.
Yep.
Get those 2 or 3 points to back into that IRA. And the next thing you know, that IRA's now got $500. And then do it again. And now that IRA's got $1,200, and do it again. And now that IRA's got $2,000, and do it again. And now that IRA might have $4,000. And Jim, you're on your way. That's how I would do that.
Let's talk about 2 or 3 other ways you could do it, because you could also do it with an option. I don't know if Bill Cook's on here, but I'm thinking of that.
Right.
It's a really good way to go. Maybe you could wholesale a deal and get a little more capital.
Yeah, but the $200 is a little light for a really good earnest money on wholesaling a deal. Just saying.
It's a little light, but just saying, right? So be a little creative.
Yeah.
So yeah, so you can make that happen, and I love starting with small dollar IRAs and wrap lending. I love wraps, Jeff.
It could be a little plot of, Jim, I take that back. It could be a little plot of land. It could be a $10,000 deal. And the $200 IRA earnest money, yeah. And then push that contract over to somebody else in exchange for $14,000, and you put a $4,000 assignment fee back in the IRA. Fantastic. You have just hit a double grand slam. Out you go. Okay. Yep. Adrian, it could be a little trailer, could be a little mobile home. Yeah, exactly.
There's a lot of investors doing a lot of things with mobile homes right now.
Yeah.
I just, as you know, Jeff, just loaned on one in Panama City, and they're getting ready to put a brand new mobile home on it and sell it. Junior Martin, other people, Pam Fisher, a lot of people doing that, just that one model.
So let me throw this next question up because it's kind of right there with it. Okay. John says, how do you find the right deal and have protections? Okay. So you find the right deal by being in the room to learn what makes a good deal versus a bad deal. Ask the older, more experienced ladies and men that do these deals, hey, what did you learn from the last couple of deals? What differentiates a good deal from a bad deal? And I'm going to give you one of my acid test little things I use. If a person will not talk about the mistakes they've made, the deals they've screwed up, and how they have fixed it, if they don't take ownership for their own mistakes, I'm not interested. Because if everything that I've always done is always gold and everything that went wrong is always somebody else's fault, I have got big warning lights going off right there. So that's the first thing. And then the second thing is the protections is this is so fundamental, but it's so powerful. Sit down and actually read a promissory note and a mortgage or a deed of trust.
Have a good cup of coffee.
Have a good cup of coffee. Kevin Flowers, I see him on the call right now. I know I've told Kevin to do that. I know Kevin has sat down and looked at these documents and just looked at it and says, okay, now I understand how these pieces start to fit together. What are my protections? What are the things I have to watch out for? So that's where it is. It starts with getting in the right rooms, getting the right information, get around the right people, learn how to trust your gut as to, okay, does this person make sense, or are they kind of like huffing and puffing and blowing smoke? Be careful, move slow, move very slow, be a lender instead of a joint venture person. I'm going to say that again. Jim, this is the second big gold nugget I'm dropping today. Be a lender instead of a joint venture person. If somebody wants you in a deal for just your money and they don't send you a promissory note and a security instrument, send it back and say, no way, no thank you.
Good point. If you're going to do a joint venture, know how to do it. It's
Know
very,
how to step in and take it over
yeah,
and be able to do it. Know
yeah.
how to step in, take it over, kick the bum to the curb and take it over. But if the JV is not set up that way, no thank you, no way.
So a couple of the other questions I know that we received were like, how can I start lending? So let's talk about that a little bit. First of all, there's 2 or 3 easier ways. A lot of hard money lenders will sell their notes. Ray, do you do that? Do any of the other hard money lenders that are on right now sell your note after you originate? Um, so that's one way, but you could also co-lend with somebody doing a wrap like myself. Like I said, I've helped some people start off as co-lenders and then they go out on their own. Ray, do you guys do that?
We work with a fairly large group of co-lenders, so we don't actually sell,
Okay.
but we involve co-lenders with every loan.
Okay. All right. And then you could also, and I'm not giving anyone financial advice, but you could also invest in a fund that a hard money lender has. Ray, do you guys have a fund?
We don't. We work strictly off of a
Okay.
one-for-one co-lending
Okay.
model.
A lot of hard money lenders do have funds, and you've got to do your due diligence, but it's one way you can participate easily passively. So keep that in mind. But I think, what are some tips? Like if you've got a little bit of money, a couple $100,000 sitting in a self-directed IRA, not invested in anything, Jeff, to begin that first step towards lending.
So, okay, I love that question. The first thing I would do is this. I would say, I want to find other experienced lenders that I can go back and look at their
Yeah.
track record. When did they make a loan? When did they record the security instrument, the deed, the mortgage, the deed of trust? And when did they get paid off? When did the release and satisfaction of the reconveyance get recorded? I want to look at a track record. I want to see that. Notice, folks, I'm giving you how to test. Once I find a couple of good private lenders, I'm going to ask them, hey, I've got $25,000 to $50,000 to put to work in a deal. Can you make room in a deal with me or for me? Can I come along? Don't expect to get the interest rate that they're getting. Don't
Right.
expect to eat
You're
at
learning.
don't expect to eat at the same table. Don't expect to get the points. But do insist on seeing all the documents. Insist on seeing all the documents. See how it works. Follow the process. How does it work with underwriting the deal? Ask questions about that. Then read the documents. Understand how the closing process works. Look at the post-closing process. When do I get my note? When do I get a copy of the mortgage where I'm listed as a co-lender? When did that get done? Keep all my records, review it, track the payment history. Do 4 or 5 of them at $25,000 to $40,000 a deal. I've got about half of my money out there. And boom, I'm now learning and earning at the same time. I'm earning and learning at the same time by finding a couple of good private lenders and asking if I can come in part of the deal. Because I'm not asking to say, hey, can I pick your brain for free over lunch?
Yeah.
Right.
No, I'm saying, I got 50 grand. Please let me in
Right.
on a deal.
Right.
I'm here to actually participate. I'm letting you make 2 or 3 points on my money. Okay.
There you go.
Yeah.
That's the way it works.
And then once you get to that point, I mean, okay. Tell truth, I had lunch yesterday with 2 of my favorite guys in Northeast Ohio. One of the smartest real estate guys attorneys in Northeast Ohio, a guy that I call when I got a problem, okay? And the smartest private lender in Northeast Ohio. Having lunch with them yesterday. The one guy started with about $150,000. He's now grown it to about 3 million inside of his IRA owned account.
Wow.
He knows what he's doing, Jim. Okay? He knows what he's doing. And we're talking about how we do these deals. We're talking about that. And he's like, yeah, he says, you know, I just like to take people in and show them how I do this and put their 50,000 to work with my money and away we go. That's how he does it. So,
Yes, I love it. All right, so I see Mary Hart's on. There are so many people on. Jeff, we're up at 150 people on like video here on Zoom. Mary, can you unmute real quick? I didn't notice.
Here.
There.
Hello,
hi, Mary.
Hey,
everybody.
there you are.
I'm
Oh,
here.
virtual
Listening to
hug.
all these
So
brains.
whatchamacallit?
High five.
Thank you.
Hey, Mary Hart is speaking
hash
in
browns.
Dallas on scaling your lending business
Yay.
because you're doing it.
I'm doing it. I'm doing it. Yes.
So
yes.
when you think about the journey you've been on scaling Fair Oaks, tell us 2 or 3 things that may come to mind that may help somebody today. It's like
Yeah. So
a smidgen of a preview.
I started out as an accidental lender. When someone, I don't know, 22 years ago asked me to loan on a real estate investment, and I did, and I loved it. And so I kind of was doing it as a hobby for 20 some years, and then, well, maybe 15 years. And then Patty Bain, who's working with me at Fair Oaks Funding now, became one of my biggest borrowers. And in 2024, I realized that I had done over $7 million of loans, and 5 million of those were with Patty. And I thought, wait a minute, I'm just little old me in a spreadsheet. Should I stop this or grow this? And I probably would not have decided to grow it had Patty not had a conversation with me, because we're business partners on some other things, had a conversation with me about she was ready to move out of Richmond and stop flipping. And I saw an opportunity. How would you like to come in the lending business with me and be the borrower liaison? You're a contractor, you speak their language and all that. So she said, that sounds great. And then it was off to the races. So I think for me,
Team.
yeah, having somebody else
Who, not how.
brought a very, you're right, who, not how, who brought a very different but compatible skill set to mine. I'm the lawyer, she's the contractor. Together, we can do a lot of things, and it just clicked. And then we hired Allie Murphy to do our marketing and our COO stuff. And so we're trying to grow this thing and make it work. We just did our first commercial loan at 1.8 million. We're up to an origination of over 6 million in the first 2 quarters of 2025. So if we kept that up, we'd be on track for 12 in our first year, really. So our first year together. I don't know whether we'll do that much. Our goal is 8, but we're already ahead of our goal based on the quarter. So we're trying to put our systems in place now, get all our SOPs, our standard operating procedures together, get all our software. I jumped into a pretty expensive software, the mortgage office, but it is allowing me to scale much faster because the math is mathing much easier. And we can bring in all these co-investors. So we started bringing in investors now. It used to just be me and my lines of credit. And then I brought in a couple of siblings and their lines of credit. And we just did our first third-party investor, who a former law client, who just emailed me and said, hey, I see on Facebook you're lending. Can you invest $500,000 for me? I was like, yep, sure can. So we just put her in a loan. And so we're just excited growing, but we're trying to do it organically and slowly, where we can get the systems, people, and processes in place to do it really well and really safely.
Who on Zoom right now, by show of hands, thinks you could learn some things about lending from Mary Hart?
Thanks, guys. Thanks, guys.
So-
Been doing it a while.
Can
Mary-
I pick on Mary for just 1 second?
Okay, but I got to tell everybody my nickname for Mary, which is
Please do. Then I
True
want to brag on Mary.
It's True North for a reason. You guys can guess it in the chat. True North, Mary Hart.
Thank you. I like that.
So the one thing that I really I love how this world works together is when Chuck Glover was telling his story, he talked about how it was information he got from Dorsey Botiford. And then it was Mary Hart's generosity of her time that let Chuck ask her question after question after question
Yeah.
to just talk through that. And the success that has come because of what Dorsey put out there and what Mary helped Chuck understand, I just stand back and go,
Yeah, that was great. That
amazing.
was a deal maker. That was a deal maker. I don't know. How many years ago, Chuck? I don't remember. 5? I can't remember. 4? Anyway.
I think
yeah, that-
6.
6?
So here's
Wow.
the question, Jim, here's the question. Who was the catalyst to who in that? Who was the catalyst to
Comes
who in
back-
that?
It comes back to Dealmaker Catalyst. I got it. Nice.
It comes back to deal maker catalyst.
I
Yes.
love it.
Yep.
Yeah.
All right. Well, this is probably a really good time just to quickly tell everybody about Dealmaker Dallas. Let me do that really quick because we do have a Zoom special here. I got to show you my screen. Let's see, where is it? Oh, it's my ebook. I got to move my screen. Give me a second here. Okay, here it is. Okay. So this is Dealmaker Dallas. It's elitedealmakers.com/Dallas. When you go to sign up, I recommend you do this today because I have a special. Because ticket price for this 3-day event is normally $6.95, but when you click on it today, I changed it to $5.45. Jeff, I'm sorry. I know we talked about $100 off. I did an extra $50 a little while ago.
Oh, well. Oh, well.
And same thing with a partner. It says $1,200, but if you come with a partner can be a spouse or a friend, or anyone else that you want. It's $10.50 for partner. But beyond that, to make this like a no doubter for October, you get this private lending training list. You get my due diligence. You get this thing I called AI Lending Studio, which is a GPT based Dealmaker assistant to help you with like due diligence and underwriting. I wrote 2 ebooks in the last 3 months. Melanie's been helping me with these. This one is all on wrap lending, goes through the math. It shows you how you can quadruple your return in 5 years. So I like that math. And then I did this one. This is primarily for borrowers, which is the Private Capital Playbook. So there's a lot of bonuses, at least 4 bonuses, and then $150 off for this Zoom. So you can go here to elitedealmaker.com/Dallas. It's October 22nd, 23rd, 24th. It's myself, Jeff Watson, Mary Hart, and we're going to do this in Dealmaker format. So here's the schedule. We have David Phelps as well.
Happy birthday to David Phelps. Today is his birthday.
It is. I love it. Chuck Glover is going to speak. Eddie Speed, Mary Hart, Jeff Watson, Wendy Sweet. Tom Olson's going to help us with a group mastermind that's going to be a lot of fun, help you network. We have networking opportunities. I'm going to do a session on AI. I'm looking forward to doing that. So it's going to be a lot of fun. All right, next question, Jeff.
All right. So this is a technical question, but it comes up so often it has to be addressed. Is there UBIT involved in lending from an SDIRA? So let me now put this in English so that people other than Mary and Jim will understand what I'm talking about, okay? Is there unrelated business income tax involved when lending from a self-directed individual retirement account? The answer is no. But this door can swing one way on the hinge, but not the other way. There could be UBIT involved if the IRA is borrowing instead of lending. Bob asked the question, is there UBIT involved in lending from an SDIRA? The answer is no, but there could be UBIT if the SDIRA, self-directed IRA, is borrowing and making money with borrowed money. So I hope that's pretty clear. For those of you that don't have an IRA, don't worry about it. For those of you that were using this as a reason to keep you from being afraid to do a deal, that I just got rid of your fear. UBIT is not a factor when lending or wrapping with your self-directed IRA, period.
How many, by show of hands, have some balance just sitting in your self-directed IRA right now? I do. Okay.
Yeah.
So we network.
All right.
Okay.
Let me do another question because this is an important question, okay?
Okay.
Barb says, what are some ways to recover your investment when things go south? How do I get through foreclosure? The advantages and disadvantages of deed in lieu versus foreclosure versus a rent receiver or assignment of rents. And that is a really good question. And so I'm going to just talk you through some of this because a lot of the stuff that I see is stuff that went sideways. I don't normally get involved in a lot of deals until something goes wrong. And then believe me, they're there. They want to talk to me. Okay. So the first thing is this: find all of your paperwork. Make
Awesome.
sure you've got it all. You'll be stunned to find out that you don't have a copy of the original, that you don't have the original note. You'd be stunned. You may not be able to find a copy of the executed note. Get a copy of the recorded mortgage or deed of trust. Those are the first two things. Then the next thing is make sure you've got current contact information from the borrower. Then get eyes on the property. Get eyes on the property. Is it still there? Did it get burned down? Did it get bulldozed? Does it even exist? I've seen IRAs lend money on houses that did not exist. Yes, sad, but true. Does it exist? Get eyes on it. And then if the borrower is flat out ghosting you, completely silent, non-responsive, refusing to pay, then you're going to go have to find a good attorney in the area where the property is located and hire them to do the foreclosure. And the IRA must pay for the foreclosure cost, which means you may have to make another contribution to the IRA for the purpose of doing this. And so this is why I always tell people, hold some money back, because A, you don't want to lend too much money on any one deal. B, you want to have a little bit of cash reserve. And C, you want to keep your LTV to where if you have to foreclose, you will make more money than otherwise. The one gentleman I had lunch with yesterday, he's had to foreclose twice, and all the deals he's ever done, he made more money on both foreclosures than if they'd have just paid on time. Why? Because he did his paperwork right, he kept his LTV where it made sense, and he's not afraid to go use a good lawyer to get it done.
Love it. I have foreclosed a few times. It is never particularly fun, but it's always good when it's over.
It's always good when it's over. And then the other thing I'm going to tell you is if they offer you a deed in lieu of foreclosure,
Take it.
think about it from this point of view. Would you rather the IRA have the real estate, or would you rather say, let's do a subject to instead where you hand it over to somebody else that's a better rehab or finisher than your IRA account could be? Those are the two choices you've
Interesting
got.
idea.
One of them is a simple one. One of them is a Pete Fortunato maneuver. They both work, but you've got options. If they're willing to turn the property over, it's a question of where's it going to go? We go, yes, you want it back. Yep.
Excellent. Okay, I know one of the other questions that was coming in, Jeff, was I remember seeing about draws and things like that, and like the flow of money is
Yes.
pretty important. I know when I'm doing private money lending, I've always allowed you to hold my draws in your trust account. It's not in a checking account where you're going out and making, the plan to come on the cruise with us or something, right?
It's in a special account that is intensely monitored, not only by my office and the bank, but the Ohio Supreme Court. I have to at any moment be prepared for a representative of the Supreme Court to walk into my office and go, show me your trust account records. And if I can't account for every payment in there that matches what the bank statements show, me got problem, me lose law license. So we keep it there, and we have.
You got to manage it closely. Like you've got to really be careful with that, because when the investor needs the money, like I've got one coming up on this new mobile home. I think I got to fund the mobile home next week.
And so it's just a matter of tell us where the wire needs to go.
Right. Like I've got to have confidence that I've got that, right?
Yeah. Yeah, and here, let me start with this. I have changed my closing instruction letter that goes to every closing attorney and all the title companies that are out there now, going, in the event that the borrower's proceeds are in excess of X dollars, all funds in excess of this lower amount need to be held in escrow, here's where you send it to. Because I don't want my borrowers walking out with too much money, because things can happen. We
Mhm.
then take it and hold it, and then as soon as we're specifically instructed, I just sent a wire yesterday for another client, boom, it goes out. Where it needs to go, when it needs to go, and it gets there. And this way it controls that the process where it can't be overspent, can't be misspent, can't be squandered by somebody. It keeps contractors from getting overpaid right away. It keeps rehabbers from going crazy. Just all sorts of things. There's checks and balances of this. We want to let the water come out in a consistent stream, not in, drops and then a wave, if you know what I mean.
Yeah. Good points. Jeff, do you have time for one more question there?
I've got a time for a
Okay.
couple more questions.
All right,
I'm
take
keeping
it.
a close eye on the clock. Here we go. Can Jeff discuss lending with 401ks versus IRAs? What are the differences, if any? I will do it real quickly. A 401k plan that you are the trustee of, you can lend a little bit faster and quicker than you can lend out of an IRA where the money's with a custodian. Now, between you and me, if you're a beginning new investor and you've not done at least a dozen deals, I like to see you lending out of your IRA that's at a custodian.
Yep.
I like
Yep.
to see you lending out of an IRA with a custodian. Once you've done a dozen deals, and you know how the flow works, you've worked through the process and so on. Okay, now we'll either be straight out of my 401k, where I'm the trustee of my 401k and I have a fiduciary duty to take care of my money, or I will have an IRA-owned LLC or an IRA-owned trust that I now make my loans out of. But I'm going to tell you right now, once you move to that level, you have a higher level of operational fiduciary duty and skill that's required. People that think that the moment they get an IRA and they get an IRA checkbook and they have checkbook control, it's like handing a 16-year-old kid the keys to a Lamborghini or a Formula One car rather than a Toyota Camry. Okay? They will wrap it around a tree somewhere. I watched it happen way too many times, and I get called right like with the tow truck to come clean up the mess.
Some of you guys are like hitting the reaction, the clapping hands reaction. I mean, is that resonating with you guys? Sandra, I noticed that was you.
Absolutely.
Tell us why that resonates with you.
Probably because my past history, I got into a large deal, being newer, and with a ne'er-do-well partner. So I really didn't understand the system first, but then after I learned from my mistakes, now we are lending. I am particularly lending out of my self-directed with a custodian, and learning all of the hoops. They have checklists that you have to follow. So I am learning as I'm lending, and it's just been, I feel like I'm kind of being coached, but I'm doing it all not really on my own, but kind of on my own, because I have the custodian there. They're helping me and protecting me, making sure I do things right.
All righty. I lend out of my IRA and I do it from a trust. So I have checkbook control over my trust. That's how I do it. I do it through a personal property trust. I think if I had to do it over, I probably would have done LLC. But I think both can
But
work.
the
Okay.
method you use screams Jack Miller. It just screams Jack Miller to me.
All right.
Which means you learn from
I
one of
hope
the
so.
absolute best.
Sometimes I wonder if I got
Yeah.
it, but I love it.
Yep.
You got one more there, Jeff?
Oh, there's more questions here.
Oh, we had a ton
Here's
of them.
Here's one that I want to throw to you, Jim.
Oh,
Okay. How do I raise capital from potential co-lenders before I have an actual loan ready to be funded and before I've done my first private money loan? Which comes first?
Yeah.
Having funds available to lend or the qualified borrower? I haven't
usually
done funded a
about-
loan yet. So
Okay.
how do I overcome the objective from prospective co-lenders and borrowers?
I don't get any objectives. There's a lot of money just sitting on the sideline right now in IRAs. Jeff already said there's $1 billion right there. Teach people how to use their IRAs and show people how they can participate with you. What I do is I go to the Dealmaker Facebook group when I get loans that people want me to originate, and I tell them, like, I've got 2 or 3 loans. I need X amount of capital. And if you're interested in talking to me about being a co-lender, message me. And that's all I do. And like, I fill all my loan capacity that way. Some of my co-borrowers are on Zoom today, which I love. It's good to see you guys. Believe me, I'm very appreciative of you guys. So I think you could start the conversation before you've got the loan. You could say, like, I've been doing some wrap lending, and if you want me to contact you on the next one I get, if you want to, like, essentially think of it as like wholesaling, do you want to join my co-lending list where I can email the information once I have it, then start building a list that way. But I really like a tight community. I don't want a ton of people I'm working with co-lending. It's one more thing I've got to manage. I'm trying to be careful who I work with. So you've got to be aware of that as well. And some of your best co-lenders aren't people that do real estate. So keep that in mind. I was thinking about it because I was at the chiropractor this morning. He's trying to sell me his commercial real estate building, which is actually a good deal. I can buy it for like a 9.5 cap if somebody wants to partner with me. Just kidding. But then I was thinking, like, once he's got all this capital from selling his building, he could potentially someday be a co-lender to me at like 7 or 8%. See how that works? Like, I could potentially buy his building, and then when he's got the capital, he's got to reinvest it. He could co-lend it with me at a pretty good rate. So that's kind of how I think about things. Jeff, what are your thoughts?
I'll have a lot of thoughts, but I'm going to answer a question that came in that I think is really, really
Okay.
important. When we use the word co-lending,
That's a good point.
or when we talk about wrapping, we're talking about people who are making loans
Right.
that they are putting their money out and someone else is receiving the money and signing a note, a promise to repay, and signing a security instrument, a mortgage or a deed of trust, and a personal guarantee, and maybe other things. This is not, I'm going to say this again really slow, this is not a joint venture.
Yep.
Each person is identified in the paperwork as either a lender or as a borrower. You're not in the deal unless you have money at risk. You are not in the deal unless your role is clearly defined by the paperwork. Now, when 2 people come together and they own a note together, Jim and somebody else can, let's just do it this way. If Fred Flintstone and Barney Rubble decide to lend money together, the note may have them both listed as tenants in common as to the respective 50% interest. Great. The mortgage is going to say the same thing. They both put in $50,000 and the borrower signed a note for $100,000. Everybody's happy. There's no JV. Now, the other thing that I want to hear here, this is important because this is going to answer 6 questions that I've seen in the chat and that came in beforehand. When you have a mortgage that is secured by real estate, or that is going back to real estate, a mortgage securing a note going back to real estate, it is not, let me say that again, it is not a security. It is not a security. The United States
Great
Supreme
point.
Court many years ago said that a note secured by a mortgage on real estate is not a security. I'll be quiet now, Jim. Sorry.
No, it's all good. I was just thinking, Jeff, there aren't many rooms where you can normalize this level of a discussion on private capital. They don't exist.
Yeah.
And really, they just don't. So I really appreciate all the people that are on here. There's a lot of tremendous investors that are on with us today. And getting your input and having like all of this come together pulling together, it helps me become better. It helps Jeff become better. Like we all get better together. And that's really the deal maker way. So thank you.
So I'm gonna give everybody a golden nugget right now. If you've not yet screenshotted and saved the chat, all of the dialogue in that chat, that's worth the
Yeah.
price of admission right now.
Right.
The gold
Well,
that's
it was
in
free to
there.
come.
The
So
gold
if-
that's in there. I mean, I can't wait to get my hands on that and read it again because there's so much stuff that's being shared
You can
among
save the
people there.
chat, click the three dots next to where it says, I'm sorry, it says Inner Circles Community Zoom, but just click the three dots next to it. It's because we do Inner Circle every Wednesday. I'll put that, I'm gonna put my link for Inner Circle in here too, Jeff, because
Okay,
Inner
yeah.
Circle is $97 a month and we normalize these discussions on a regular basis, like all the time.
All right. Jim, I've got to pay
Gotta
attention to
run.
my phone right now, but
Yeah.
so I may have to just
Oh.
step up and walk away. But in the meantime, let me just find another question, toss it your way,
All
and
right,
go from there, okay?
you got it.
Oh, by the way, I just answered Rick's question, which was, which ways can wrap lenders acquire capital partners without violating SEC regulations? And what are definite no-nos? Definite no-nos are dealing with notes that are not secured by mortgages. A wrap lender who has their own separate note secured by a mortgage is not a security. So we don't have to worry about SEC regulations, okay?
Can you repeat that one more time, please?
Yes.
Okay.
Hmm.
Ooh, I'm going to do it twice. A wrap lender who is lending and has their own note in either first or second position, and that note is secured by a mortgage or a deed of trust, that is not a security as defined by the SEC, the Securities and Exchange Commission. So please do not let the word security instrument, deed or mortgage, or deed of trust or mortgage be confused with security as in a stock, bond, mutual fund interest, etc., traded on Wall Street. All right?
Okay.
Did I get that? Was that clear?
Someone's asking for like the difference between fractionalized lending and wrap lending. To me, there are people that are blurring these lines, Jeff, and I don't know that I even know because it's getting difficult with all the information coming out from multiple sources these days. Do you have
Oh.
a feel for this one really quick before you
Yep,
go?
I do. Fractionalized lending, if it's what I think it is, because I don't do it that way, it's not a word I use,
Neither do
is
I.
that you have multiple tenants in common. You have 4, maybe 5 different lenders, all as tenants in common as to their undivided interest, listed as lenders in the same note and listed as secured by the same mortgage or deed of trust. That's fine. Everybody's in first position, pari passu, side by side, shoulder to shoulder, by rank, okay? Tenants in common on all the lending docs. Fine and dandy. Wrapping is when one lender is in first position and another lender, the wrapping lender, is in a second position. So the first lender would get all of their money if something goes wrong before the second position lender would get a dime. So if you're brand new, I would rather be wrapped by Jim Ingersoll's money than to co-lend with Jim Ingersoll's money. Why? Because if I'm wrapped by Jim Ingersoll's money, I get all my money before Jim gets a dime. If I'm brand new, I want Jim, and I trust Jim. I want Jim to always be worried about Jim getting paid, because if Jim gets paid, I get paid.
I haven't had any default in like 10 years, but so and if you got two lenders lending pari passu, Jeff, then which means side by side, that's pari passu, then you're going to be on an intercreditor agreement the way you and I do it.
Correct. Absolutely
And
correct.
if
And
we're
if
at
you're
different
wrapping-
rates, then we're going to be wrapping.
If you're wrapping, then I don't need an intercreditor agreement. Instead, the terms of priority are spelled out in the note and in the mortgages. And here's my phone call from Congressman Barr's office. I'm going to mute. I'll be back.
So there's a lot to this, guys. And we went through a lot of this at Dealmaker in Orlando last January, but it takes time, at least for me too, because like my lending is a lot busier than it used to be, to come up and make sure I've got all this terminology, like the difference between a wrap where my co-lender might be lending at like 6 or 8 or 9%, and I'm at 10%. Where sometimes lately I've been doing a lot more where my co-lender and I are at the same rate, both at 10%, and I keep the points. And then we do it on an intercreditor agreement. And knowing like which path to take on all of that, I love that structure, but it takes a little bit of time to get it all down. But the good news is we're going to go through it in a lot of detail again in Dallas. And Jeff's going to go through a lot of the paperwork to make sure you understand it.
Jim, can I just add one thing?
Yeah, go. Hey, Rob.
So, hey, Jim, how are you?
Charlotte. Let's hear about that
Yes,
when
getting
you're
ready to
done.
go. So just to
Yeah.
come off of what Jeff was saying,
Yeah.
as a general rule, whether you're dealing in securities or is not, if you look at the Howey rule, there's this thing called the Howey rule, and basically the Howey rule says that if the income generated on an investment is based off of someone else's effort, then you're selling a security. So the distinction that Jeff was making in both between the wrap or the fractional, he was talking about it's not a security, absolutely not, because your money is being made off of lending on a deal. But once you start selling tails, and this goes on a lot in the note business as well, you're selling tails or selling cash flows or things of that nature, and you're making money off of somebody else's deal, that's where the blurriness comes in. So
Gotcha.
the general rule is the Howey rule, that if you're making money off of somebody else's effort, then you're dealing in securities and you do come under the SEC. So take a look at the Howey rule, and that's usually the good rule of thumb is looking at that. That's all I want to say. Great job here,
tell
Jim.
us
Thanks.
about Dealmaker Charlotte, because your launch is coming up on the lake.
Yes, it is. So
tell
we're
us.
starting deal makers in Charlotte, and you'll excuse me because I'm picking my kids up from soccer camps. They're about to jump in the car here.
That's awesome.
But Deal Maker Charlotte, we're starting on August 19th. We'd love to see as many people as we can out there. You can go to charlotte-dealmakers.com. We want to bring, all this great talent, information, and people to the Charlotte area. I think Charlotte's a great area for growth. A lot of people there, a lot of great investment environment there. And I think a lot of what we talk about here is really needed over there as well. So I'd love to we're going to do it on a monthly basis as well. We're going to try and get some big events there as well. And, we want to be one of the best in the deal makers community nationwide. So,
You guys are awesome and in an amazing market.
Yeah. So we're going to be starting that August 19th. Go to charlotte-dealmakers.com. We'd love to have as many people as we can, as much support as we can, because we're going to rock and roll over there out in Charlotte. We're looking forward to it.
I know
and
you
we're really excited about it.
Love it. I got a lot of chat going on in Charlotte now. I love that. All right. So I want to divert from the submitted questions and ask if you guys have a question. You can just unmute and talk to me. I'll answer it if I can. I'll do my best. Who's got a question? Or tell us a little bit about your story. Go ahead.
Hey, Jim, it's Chris Tillman.
Hey, Chris.
Hey, Chris.
I just want to find out real quick. Brandon is going to take off and come with me to Dallas, and I was wanting to find out how to get him registered. I can't find the.
Okay.
You have to do a link or add him to my my roster.
Well, it's probably a good time just to do a single registration right now, because it's $150 off, and that's just about the same anyways.
Okay, and the website's still showing the old price.
Well, it does, but when you hit the shopping cart, it'll adjust.
Okay.
Let me just make sure here. I'm going to do it.
And the other question I was going to ask you was, I can't get a straight answer on. I'm trying to I'm going to transfer my traditional and my Roth self-directed IRAs.
It works.
Into solo 401ks. Can't that be done?
What are you going to do?
Transfer my traditional self-directed IRA into a solo 401.
Yeah. Yeah. Who's your custodian?
Avanta.
Okay. No, they should be able to help you with that.
Well, I told it to him 3 times and he kind of went back and forth between yes and no. So I just want to make sure, because I've got.
Does anybody else know? I don't personally have a solo 401k,
You cannot transfer from a Roth IRA to a
Oh, he
401k.
said traditional.
I know, he said traditional and Roth.
Oh,
You
you can
can't
do
see the Roth
traditional.
IRA to the 401k.
But can the Roth go to its own Roth solo?
Mm-mm.
A Roth can go to a Roth. Let me share. I have a
Right.
great rollover chart.
Oh, we should talk a little bit about
Um,
rollovers. Oh, it's coming your way, Chelsea. There you go.
There you go. There's a rollover chart on what you can roll where.
Okay, that's it.
Yep.
Cool.
I
Thanks.
thought you were going to share your
You
screen.
bet.
Just
So
be
tell us-
careful. Excuse me, Jim. This
Yeah.
is Susan. Just be
Susan.
careful when you take your traditional IRA out. You will be having to pay income tax on the profits. So sometimes it's easier if you put maybe half, depending upon how much you have, this year, and then in January put the other half in, or do it like that. I'm speaking from experience. I took out a lot, and I was hit with a lot of money.
Even if I'm transferring apples to apples?
No, if you're transferring
You
from a
do a
traditional
distribution.
IRA to a self-directed traditional IRA, it's the same thing. But if you want to take the money out as a distribution and then put it into, like a backdoor Roth, that is where you're going to have to pay taxes, because you are dissolving your traditional IRA.
Okay, because what I'm doing is I just quit my federal job, so my thrift savings plan is getting transferred to the solo, and my self-directed IRA traditional is getting transferred to the solo.
I'd work closely with Advanta on that. They should be able to help you.
Okay.
Do you mind if I jump in and just kind of
Please.
address one quick thing that Susan mentioned? So
Chelsea.
if you are making what would be considered a taxable conversion, taxable rollover from traditional to Roth or something like that, you would have to pay taxes on the earnings. If
Right.
you're under 59 and a half and you have them withhold the taxes from the rollover amount, that is considered a withdrawal subject to penalty, the 10% penalty. So do not have them withhold the taxes from that amount, or you will pay the 10% penalty on the part that was not rolled over. I have seen that happen, and it's really gross.
Okay. Cool. Thanks, guys.
Chelsea, make sure you put your contact into the chat for me, please. By the way, I want to tell you guys, Chelsea, I love having you in Inner Circle with me, but also you guys have been a great sponsor for Dealmaker, and we really appreciate you.
Yeah.
And man, I just really do, because you have levels of detail that I don't. All right, Jeff, last question. I was just thinking about this.
Okay, I'm back. I'm back.
What about Roth conversion? Like, a lot of people have money. We were just talking about traditional IRAs, but a lot of people have money stuck there. They'd love to get it into a Roth. What are 2 or 3 ideas to do a rollover without paying a ton of taxes?
Okay, I'm going to tell a story. This story is not tax, legal, or financial planning advice.
That's true for the whole Zoom.
That's
Yeah.
true for the whole Zoom. But when I have people like Mary Hart and Chelsea and others on the call, I have to make sure I get all my disclaimers in, okay? So this is a story. Fred Flintstone lent money from his traditional IRA to Barney Rubble. Barney bought an ugly house and gutted the house, and the house looked horrible. And Fred drove by and said, "Boy, that house looks terrible. I don't think it's worth what I got loaned on it." And then Fred looked at the note and said, this note, I don't know. So he goes and hires Pete to take a look at the house and look at the note. And Pete comes back and says, "Fred, this note's for $100,000, but right now the best I'd give you is like $62,000 for it." And so Fred says, "Okay, write that, put it in writing." And so, okay, So Pete writes $62,000 as opinion of value, as he's a note buyer and so on. And so then Fred takes that $62,000 opinion of value and goes to his custodian, his favorite custodian. I won't mention any names because I got a bunch of them I like. And he goes and says, hey, I got this asset in my traditional IRA. It's a $100,000 note, but Pete says it's only worth $62,000. So I'm going to convert it at $62,000 from my traditional to my Roth. And so he does the conversion at 62 and pays taxes as if it was $62,000. Barney shows back up at the job site, hires a better contractor, and 4 months later, the house sells for $200,000. Fred gets fully paid back. All $100,000 plus all the interest is now over in the Roth IRA. Completely legal. Completely legal. I see that happen on loans. I see that even happens with bigger discounts on syndications, oil and gas, and things like that. Okay.
I like it. All right. we got
Did I
time
go
for
too
one-
fast, or did my Zoom freeze, or what?
No, you're good. Let's take one more live question.
Sure.
Just unmute and talk to us, folks.
Got one.
Whether you're borrowing or lending or you can do.
Hi, Jim. It's Christina.
Hey,
Good to see you.
Christina. How you doing,
Hey.
kiddo?
I'm doing good. As you know, I don't live where I work. So my question is, I don't know how to do due diligence on a property in another state.
Oh,
Okay.
How would I go about doing that?
I've really got an underwriting checklist I'd love to send you. You know, Jeff, I didn't used to have a checklist, and I created one as a promo for Dealmaker, and now I won't lend without it.
yeah.
Um,
Yeah, we have
just-
checklists in my office for all these things. Yes.
I think like the engineering part of me is still there, and I just like to be able to like follow stuff. So I'd like to send that to you, Christina. Jeff, what comes to mind for you? It's hard because like when I've loaned Christina, right now I've got loans in Alabama, Texas, and Indiana, 3 states.
And Virginia.
Yeah, those are the easy ones because I'm here, but the other ones.
Did you say Florida? You got loans in? You got a loan in
Oh, I
Florida?
forgot about Florida. Yes.
Yeah, okay.
I'm a little busier than I thought.
Yeah, you've been a little busy. First thing I would do, if I don't know anything, if I don't have a checklist and so on, I would do this. I would find out where the property is located and contact a local real estate brokerage and get a broker's price opinion, an interior broker's price opinion with multiple photographs, so that I can see what it looks
BPO.
like.
A BPO is a good idea. It's like a tamed down version of an appraisal.
Correct. Then the next thing I'm going to do, and Jim, you know this because you've seen me do this over and over and over again. You're like, Jeff always does this. Jeff wants to see the preliminary title report. Some people call it a title report. Some people call it a preliminary title commitment. I don't care what it is. I want to see the title report. I want to know the condition of the title on the property. We had a deal today. My assistant took the call. Title company's calling up and saying, hey, I know you guys thought this deal was going to close next week. It's got some probate issues. It's got this issue. We're probably months away from closing. My assistant goes, okay, no worries. Tells me, and I go, oh, that's the stuff I was working on at 7 o'clock last night. Okay, if I'd have known a day sooner, fine. But anyhow, so those are the first 2 things. Get an interior BPO. Okay.
So I would hire the broker to
You
do
would
that.
hire a broker. You would hire a broker. And if you really don't trust it, go get a second broker from a different company.
Okay.
What I do, Christina, I don't do BPOs. I'm working with people I really know, love, and trust as borrowers as much as I can. And they provide me with comps. And then I need to verify those comps though. And that's part of my underwriting checklist, just like little things that help me remember to make sure the comps are good. And then
But that's what a good BPO will give you. A good BPO will list
I think
those
it's a
comps
great
down.
idea. I'm not personally doing that. If I need to, I can look them up on PropStream or Rehab Valuator or Zillow and get a feel for comps that way to kind of verify it. But then you got the condition of the property, you got the borrower, you got to think how you're going to handle draws, inspection of the property. There's a lot of things that you can't do when you're out of the area. A lot of people are using SiteWire as a resource. By the way, they were a sponsored deal maker twice. Really great resource. I don't know if anyone's using them, but they've got technology that'll help you with your inspections. So that's a couple things that come to mind on my side.
Thank you. Yeah, I mostly work with people I know and trust as well, out of state, but I would like to expand a little bit.
Yes. Are you in San Diego these days?
I am. Yeah, not investing in San Diego.
No, I understand.
Yeah.
Love it. Jeff, one last question. What do you think? Last one?
Yeah,
Thank
let's
you.
go one more. I mean, let's get it. Let's get one more in here.
I want to
I have a
say,
question.
like, those of you guys that are signing up for Dealmaker Dallas, thank you. We've got
Thank you.
several that are
Yes.
in. When you click on the shopping, like the registration thing, that's how I flipped the price down $150. So I didn't take time to update my website. I did not have time for that. But when you go to the shopping cart, that's where I did it. But Jeff,
Hello.
yeah. Hey, Mike, how you doing?
Good. How are you? Mike
Tell us
Christina from
where you're at and all that.
Eastern Connecticut. So I have an IRA trust and I buy and sell and I lend. And my problem is when money comes back to the local bank, it sits idle. And I can't seem to set up like even a simple money market account. You know, it sits there making embarrassing interest.
Yes, me too.
Ah, so I'm not alone.
Well, I know, I'm glad I'm not alone.
Nobody can, the only thing that my
Are you
bank
in a
offers
trust?
me
You're
is
in a trust. I'm in a trust. And
Yeah,
so I
yeah.
use in Virginia a bank called Chesapeake Bank. They're awesome to work with, but they don't have any options for me to go to money market. Jeff, what are your thoughts on that?
So my thinking is have a conversation with the bank and say, what can I put money into a 90-day CD? Can I get a better rate on a CD? What can I do? Can I use this? How do I buy treasuries, 30-day treasuries with this, whatever, to try and get a better rate of return than what they're going to pay you on that checking account? Because if you can move it to something that gives you a better rate, that's fine. But whenever you have that conversation, please, everybody listen to me. Do not give them too much information. Do not go in there and say, oh, this bank account is for a trust that's owned by my IRA that's custodied with this company. No, don't do that. I've got this bank account.
Talk about 45 minutes of just finding the right bank for your trust account.
Oh, I know.
Because I had to switch mine. Oh my gosh, what a lot.
Yeah, I mean,
there's so many accounts and it took me so many hours of work.
It did.
Well, my bank is okay, but they offer like a 7-month CD with a 3-month penalty. And I know as soon as I put the money in there, I'm going to want it for something. So it's going to cost me money to put it in a CD.
Challenge yourself to get that money to work, Mike. That's what I do.
Yeah,
So
just put it back
Mike,
out.
let me put it to you this way. Go to your potential borrower and say, hey, listen, it's sitting in a CD. This is what it's going to cost me to get it out. Are you willing to cover that cost?
Huh? Yeah, okay.
Well, that's a
Okay.
great point because you could do your prepayment penalty. Hey, I'm just going to say this as somebody who raises capital. One time, Jeff, I was raising capital and somebody told me that who was a realtor who sold one of my flips, and she had all of her money in a CD and she was earning like 4 or 5% back then. It's a long time ago. But she said she would like to lend to me and make more than that, but it was in a CD. So I asked her, I said, what's your prepayment penalty? And it might have been like $400. I said, how about if I pay that $400? We unlocked that CD and she's been lending with me for 10 to 15 years. So just a little tip as a borrower there. I love playing both sides.
Yep.
All right. That's all the time we have. Go to elitedealmakers.com/Dallas. Jeff and I would love to be with you guys. The chat is a pot of gold.
It
I'm gonna
is.
save it and then I can hopefully email it to you guys. I'm gonna email the replay as well. Jeff, any final words here? What do you think?
Yeah, I have a word. I'm going to talk about a word that we've kind of talked about it a little bit. Catalyst. This is what I love about Dealmaker. The Dealmaker events are like these catalytic conventions. It's a catalytic convention. It gets a bunch of people together who can start synergistically doing things with each other. It creates good, positive reactions. So if you're not registered for the Elite Dealmaker event in Dallas, all about private capital, you're missing out on the opportunity to be at a what I call a catalytic convention. I just came up with that, okay?
I like it.
It is a spark. It is an igniter. It is something that really helps you take off and go places.
So let's do that. Let's be limitless, since that's the theme of both of our next two deal makers. And let's use private capital. Let's work together. Let's create relationships and relational capital and share deals and allow each other to participate in them. If you guys if you have, I mean, put your yes, there is a Houston deal maker. They met last week for the first time and it had 150 people at it. That's separate from the one in Dallas. EliteDealmakers.com/Dallas is the one Jeff and I are doing together. Man, there's a lot happening in the deal maker community. Gets a little confusing.
I love it.
Yeah, let's work together. Put your contact into the chat one last time. I'm going to put my email in here, jim@elitedealmakers.com. By the way, there's a ton of people also watching right now on Facebook. And I see the comments rolling in. I just want to say thanks and shout out to them as well.
Yes,
Jeff, I
thank
can't
you.
wait to see you again in person. Did you guys see the video Jeff and I shot on my boat a few weeks ago? I'll have to post that to our Facebook group. It was fun. Wendy Sweet, always good to see you. Wendy Coles, awesome to have you. Augie, can you just say a final word about living your legacy, making an impact, and then close us in prayer really quick?
I'd be happy to.
Yeah.
You know,
What are
so
your
many
thoughts
people
on
say
all this, pal?
the wrong things in life. I did a post, I think it was today, and I
I
asked,
saw it.
when you started climbing your ladder of success, was it leaning against the right wall? You know, success versus, impact, two very different
There
things.
you are.
And, what is it you really want to do with your life? You can't change the world, maybe, but you could change the world for somebody. So let's close in prayer. Heavenly Father, we give you thanks for bringing us together today, 150 people here and more online. Oh, we are so blessed to have this community, people that are willing to share everything. This is a very open kimono community. And Lord, you've blessed the guys that led this call today and the folks that asked questions and shared in the chat. Continue to bless us that we may continue to grow our wealth and use it wisely and as good stewards to just continue to build your kingdom. In Jesus' name we pray. Amen.
So I'm just going to close with, I love Chair the Love. And that's why I asked Augie to close in prayer. And the work that you do, Augie, we're deeply grateful for all the months you're spending abroad in Africa and the Philippines. And you and I were in Guatemala with some of the people on Zoom right now. We had a great time. We love Chair the Love. Get out there. You can donate for $20 a month very easily. Click that QR code and just scoot over a little. Shoulder out of it.
Tell all of your friends, here's what we're trying to do. We're trying to get 100,000 families to donate, not even $20 a month, $18 a month will do it. But that would allow us to deliver 100,000 wheelchairs a year. We're not going to achieve that overnight, but if all of you help and invite 5 people that are doing what you want to do, and then they invite 5, you'd be surprised at the impact we can have. I never thought we would deliver 20 containers of wheelchairs in a year, considering it took us 2 years to raise our first container and 2 years to raise the second. This year, 5,000. Next year, I'm hoping we can hit 8 or even 10,000. But
love it.
We want to get to that 100,000, and we can do it painlessly. $18 a month. Go to chairthelove.org.
And I just put also the Facebook group in there. We're trying to grow that group and share and really share this mission. We're looking for volunteers as well. All right, guys, it was awesome to see you. Jeff, closing remarks? This was
God is
fun,
so
Jeff.
good. God is so good. That's
All
all.
the
That's all
time.
I got to say. God is so good.
Amen. It isn't very many Zooms and communities where we share this openly and then close in prayer.
Yeah.
Thank you guys for allowing us to do that. Have an awesome day, guys, and we'll see you around soon. So I'll see you in Dallas, I hope. Bye-bye.
God
Peace.
bless you all.
Thanks for sharing, everyone.
See you guys later.